Thank you, Chris, for joining us today. Congratulations on winning FOW's International Award, winner of the Fixed Income Trading Solution of the Year. And I suppose another congratulations for Tradeweb as a whole. I know that you've had 3 of your most successful trading months in 2020. So massive congratulations to you guys. If you just wanted to give us a brief overview of who you are and your role within Tradeweb.
Thanks, Oliver, and thanks to FOW and Global Investor Group. It's a real honor to win this award this year, and we credit our team for delivering what we think is a really excellent product, and our clients for helping us deliver the right solutions. I'm Chris Bruner. I manage the U.S. credit group at Tradeweb. We've really focused heavily on building out a lot of workflows for our clients over the last 5 years in the credit marketplace. And we're really excited to see a lot of things happening in the platform in terms of growth. We've tried to focus on delivering solutions for all the types of trades a client wants to do in the credit market, as opposed to just purely the ones that were originally electronically traded, but also their larger voice trades, and as we'll talk about today, larger blocks of risk that they want to execute through portfolio trades.
So if we kick things off, why do you think electronic portfolio trading has become so valuable for your clients?
It's an interesting story in the credit market, and I think it really relates to the way clients trade. Most of our clients have large, diversified baskets of risk. They hold, many thousands of CUSIPs in some cases in their funds. And the credit market has over 30 or 40,000 CUSIPs just in the US high yield and high grade market. And what we find is that, if you look at TRACE, maybe 8 or 10% of those bonds trade on a given day. So it's very different in character to the equity markets or to the futures markets. And portfolio trading is a great way to basically bridge that gap between a long tail of potentially illiquid bonds and the character of the portfolios the clients hold. And so, one of the things I mean specifically by that is trading credit is not necessarily thresholded by the risk of the instruments, right? We're talking about instruments that yield 50 to 100 basis points above treasuries for a lot of high grade bonds. It's more thresholded by the liquidity. Can I trade this today? How much can I trade? How quickly can I trade it? And will the price be within context? Will it be close enough? Doesn't necessarily have to be, if it's a fairly liquid instrument, perfect. You might be paying a basis point or two to trade that security. But what portfolio trading does is it gives clients the ability to trade a wider array of bonds quickly and efficiently and safely for most of the bonds they want to trade, as opposed to having to search around for, well, this bond I can trade today, but that bond I can't trade today, and this bond I might have traded last week, but today it's hard to find an offer for it. And so it really seems to be tying together the way clients want to trade and they want to manage their investment process to the way the credit market does trade, by opening up these new capabilities to basically trade any complex basket of risk in a fairly efficient and quick manner.
And have you found any synergies or challenges with other areas, such as bond ETFs?
Certainly a number of synergies, and bond ETFs is, I think, a really important part of the story. It's very much where portfolio trading came from, arguably. We can't forget that the dealer capabilities in terms of their ability to price up large, complex baskets of risk for the clients is really foundational to the success of the product as well. And so what we've seen is a lot of dealers that built up capabilities to be able to price odd lot bonds in the corporate bond market in a much more systematic manner, as well as be able to price up the baskets of risk that transfer back and forth between ETFs through the create and redeem process. They've now pointed those capabilities to be able to price up any basket of risk through portfolio trading. And so, there have been synergies both with, the ETF landscape, the evolution of passive investment, as well as the dealer capabilities, as I've mentioned. And then, really, I think the biggest synergy is with, just the rise of investment in passive strategies with the Buyside. And if you see the growth in assets there, both in ETFs as well as other passive cash strategies, that's a lot of what's driving growth in things like portfolio trading, because a lot of these managers, they have a pretty good idea what they want to trade on a given day. They just want more and more efficient mechanisms to do it at a reasonable cost.
So now it's been about 2 years since you launched the tool. Is there anything that's been surprising to you in terms of how it's been utilized?
The growth has surprised us on the upside consistently. We're used to things taking a few iterations to get into the marketplace and then growing over time. And we've got a couple decades of history doing that. Portfolio trading and just how quickly it's grown from, effectively zero on an electronic platform like ours to, we're doing, I think, on the order of, 20 to 30 billion at times now on a monthly basis in the marketplace, and then Tradeweb doing about 40% of that. That's pretty quick, significant growth. And what it doesn't appear to us yet is that there's necessarily a ceiling on how quickly that can grow from here. So I think that's one of the bigger surprises. Another surprise is just how quickly clients have taken it up, especially this year. We saw record users in April and May of this year after everyone was trying to do the transition to work from home in March. And we were really impressed with clients' abilities and interests to look at new tools in a very chaotic environment. And it doesn't feel like that's gone away in any respect. It's actually just continued to grow significantly. So they became familiar with portfolio trading and found out it was hopefully a very useful tool. And now they're finding new types of trades they can do, or exactly what types of risk they can move. They're really still probing, like, exactly how do I use this tool and incorporate it to my investment process. But it does seem to have a pretty good runway from here still.
So we've kind of gathered that it's gathered a portfolio trading itself has gathered a lot of momentum this year. But why is it so important in terms of your overall credit offering?
Great question. Great question. I think it sort of goes back to what I was trying to lay out at the beginning. Tradeweb has always tried to take the approach in credit that we are interested in the way clients want to trade, and we want to help them with every type of trade they want to do. So that includes traditional electronic trades, like RFQs on our all-to-all platform, which we call AllTrade. It also includes portfolio trades and all the voice trades that they just want to get processed. And so, we feel like credit is going to remain a relationship-driven market. New sources of liquidity are incredibly important to it, and we're trying to, add every new source of liquidity possible onto our platform. But what we intend to do is become a holistic solution for our clients and how they want to trade credit. And portfolio trading slots right into the newest way to trade large blocks of risk, which remains the most important thing for clients in credit. How do I move large blocks of risk in an efficient manner at a reasonable price? And so part of the holistic approach for us is also tying together these services and reducing costs where we can. So an interesting feature on our platform, for example, is you could do voice trades where you might be buying a large amount of risk. You could do a portfolio trade where you're buying or selling risk or both at once. And then maybe you have a bunch of RFQ lists that you've traded on the platform. And what we try to do is we take all that risk and we actually net it down in the high grade space, so that if you need to spot all those trades where you're typically paying bid offer on the underlying treasuries, which can add up very significantly, we actually run the resulting net risk and we send that out electronically to the treasury market. And so it's fairly unique to us in terms of having this linkage to our electronic treasury liquidity pool. And it's one of these ways that we try to take a bunch of components at Tradeweb and then put them together so that we can do new things for clients. And so really, I think that holistic approach is what we are excited to continue investing in for the clients.
And how do you see portfolio trading developing further as we head into 2021?
The investment is certainly not over, and if anything, it's probably picking up pace. So a couple main areas, there will probably be protocol enhancements that will be coming next year, other ways to trade, potentially relative to reference sources. Aside from the protocol changes, the biggest change we see is really on the data front. We already have a nice set of analytics and pricing within the tool. And this is super important to be able to, again, move these large baskets of risk between a dealer counterparty and the client in a safe way. You need to be able to do things like sort to find out which ones might be the most off, and look at your overall cash flows and look at average yields and average spreads. And then compare multiple quotes against each other. So we've made significant investments in the user interface to do that. And we have a pipeline on both the data analytics side as well as the user interface side to keep improving that process so that we can do, one, larger trades, but two, more line items. But three, really just get the process to be so efficient that the time comes down. So clients get more and more used to, okay, I can trade about this amount of risk with these characteristics in this amount of time. And so I think we've made a pretty big leap there in the last 2 years, but I think there's a long way to go. I think we could continue to improve the efficiency and the scale that we offer clients, for sure.
So thank you again for your time this afternoon, Chris. I, for one, am certainly excited to see how portfolio trading will grow over the coming year. And again, congratulations on winning FOW's Fixed Income Trading Solution of the Year.
Thanks, Oliver. And again, thank you very much for the award. We really appreciate being recognized. And thanks for our clients and for our dealer partners. We're very excited for the continued growth of portfolio trading.
Thank you.